Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Wednesday, April 6th, where we'll briefly discuss the action in the market today and then see how things look for Thursday, April 7th. And it was a pretty negative day. Monday was pretty good. And if we were going to switch back to being more positive, we needed to see follow through buying on Tuesday. Well, we didn't see that. And in fact, we saw things kind of shift much more negative during the night before Wednesday's session. And we gapped lower on interest rate concerns and then waited for the Fed meeting minutes to come out. And the markets kind of gyrated. They recuperated a little bit, but it ended up being a pretty negative day overall. So we gapped lower right at the open down to actually below S1. And then there was a pickup in selling that took us down to S2. So that's pretty negative. As the day went on, we saw more sideways action. And that's usually what happens. You have the open and things kind of gyrate around. And then once that gets settled, we see more sideways to actually, it can be more up action with an upward bias. Well, we were kind of bouncing around more than what we usually do. And there were some failed attempts at buying, but that quickly brought prices back down until the FOMC minutes were released. And the market had an initial reaction. They spiked up a little bit, then they spiked down. Then they kind of bounced all around and had really choppy price movement until we went into the close. We did close off of the low. So that is somewhat positive. We didn't close right at the low, but we still ended up being down 0.97% for the session. One thing that is different than what we've seen lately is that volume was above average. Now, what are we looking at? Our technicals, they are switching more negative. Some are still positive, but weakening. Others have already gone negative. Of course, we're still dealing with inflation and interest rates, and that was kind of the catalyst. Interest rates really started to climb in the overnight session. That pushed the S&P futures down, and that kept things down as we saw interest rates really climb during the daily session. Of course, we still have all of our different geopolitical concerns, Russia, Ukraine, the horrible news that's coming out of all of that, the potential for more sanctions to be put against Russia. What's that going to do? Not only to what's going on between Russia and Ukraine, but what's that going to do to the US economy? I mean, the administration has pretty much come out and said, yeah, we're putting these sanctions on Russia, but that's going to influence us too. So it's one thing to not like the other side or not like somebody else, but when that affects you or our families or our country, suddenly we're not as keen on that idea sometimes. Or we could have more of a World War II type mentality where it's like everybody has to sacrifice, everybody needs to help out. We really need to get involved in this. Well, we're not at war in this whole thing. We're just trying to hurt Russia and help Ukraine. We're not actually fighting, at least yet. We really hope it doesn't come to that. But that's part of the concerns that are going on in the background. We still have the inverted yield curves issues that are going on, and then the different oil supply things that I mentioned a couple of times. So what can we take away from Wednesday? The technicals are weakening, and some of them have already turned negative. And if we have either a sideways to another down day, a lot of our indicators that are rolling over just might go over and switch negative. Interest rates that are rising really fast, that's spooking out markets. And then the Fed speak that we heard about on Tuesday, well, that kind of fed over into Wednesday's session as well. And that's causing some real concerns. Not necessarily a surprise. These are things, if you pay attention, you're not getting caught off guard, but there's still that reaction that takes place when we start to see that from Fed officials, from the Fed minutes and so forth, or FOMC minutes. Right now, we're still in kind of a short-term range inside of an even bigger intermediate term range. where we didn't see the small and mid caps go up on Monday, but boy, they've sure gone down the last couple of days. The S&P did drop back below its 200-day simple moving average. That's negative in a longer term perspective. And the 20-period simple moving average during Wednesday's session did act as support, and we ended up closing right at the 20-period exponential moving average. But sentiment is not really dropping. The fear and greed index that I look at, we just blipped a little over into the negative side. So at least according to the measures that make up that index, we're not seeing a lot of fear yet. We're seeing fear in other areas. The VIX is back above 20 and rising. And so that's causing some concerns. But in a bigger picture look, we're not seeing a lot of fear coming into the market right now. We did have the FOMC minutes come out, and in those minutes, there, of course, are inflation concerns. Well, we kind of already knew about that. And right now, the Fed is still in this process of doing quantitative easing, where they're printing money and then using that money and introducing it into the economy by buying bonds. Well, bonds have gotten such low returns as far as interest rates, a lot of that money goes over into the stock market. And that is really what's helped fuel the big run up that we've seen over the last couple of years. What's going to happen if they start to do QT, which is quantitative tapering? They start to get rid of all these things that they've been buying. Is that really going to impact the stock market? Now, we still have some time to go before that's going to happen, but the market is starting to deal with that now. And that could be part of the negative aura, I guess you would say, that we're seeing in the markets right now. Now, there's still more of a positive backdrop. There are some very positive things that could develop in the market that I've alluded to and even have talked about in other videos, but it might still be in the room, but it's way back in the back with the lights off. You don't really see that right now. And if we start to go higher from here, I'll bring those things out and talk about them. But there are potentially some really positive things that could happen. When we've been in similar situations before in the past, we're seeing some of those same things play out, and that was very good for the stock market longer term. But as long as we're more negative now, those positive things don't really matter at this point, and there's no guarantee that just because things performed in a similar way in the past, that they're going to do the same thing now, because we're in slightly different environments. As far as the current market valuation, and that won't change for the whole week, they're still saying fairly valued. And part of that is because the yield curve that they use is the 10 to the 3 month, which is actually going up. It's far from being inverted right now. As far as our trend, the lines crossed, and I have the ADX that I'll briefly go over. We are negative. The green line crossed below the red line, and we're also seeing the ADX declining. We're still a little bit above 20, but we're getting close to dropping below 20. Our bias is negative with the down day, and the last number of days, even with Monday included, our momentum is still negative as well. So here's a daily chart. We really gapped lower here. Now, can we stay above this pivot level? That's one thing to be aware of. If we do get some kind of a bounce, because we've fallen pretty far, pretty fast in 2 days, are we going to hit some of this upward resistance? Now, if we continue to go down, are we going to break below the pivot point? And you can see down on the bottom that we, for the first time in quite a while, we've actually seen volume above average. Here's the ADX, where the green line is crossing below the red line, but the overall ADX is starting to drop, which is showing a weakening trend. Here, I just wanted to bring this up, where the 20-period moving average, we got down to the simple moving average, that's the red line, and that acted as support. And then we closed right at about the exponential moving average. So these are just different levels to watch, to keep an eye on, because it just forms part of our technical analysis picture that we like to form every day. Here's our spaghetti tree where, yeah, we dropped below the 100-day moving average. And it's also showing that we bounced up off of the 20 only to close right at the other 20. Then here's our rainbow. It shows us falling back down a little more into the rainbow right now. We did go below the 200-day moving average. The moving average is at 44.90. We closed at 44.81. So we're 9 points below the moving average right now, and that's more negative for the longer term picture. So what's our outlook for Thursday? As far as our technicals, some have already gone negative and others are showing weakness. The markets still remain in an intermediate term range, and we've been there pretty much for all of 2022. There's still this almost daily battle back and forth. Monday saw growth win. Tuesday and Wednesday saw value win out in this battle. There's still the different yield curve concerns. We're still dealing with oil and different supply chain issues. Now on Thursday, we have the weekly jobless claims that come out. They come out every week. That's why they're called weekly. And then consumer credit. Neither of these, a lot of people think that the jobless claims, they really impact the market. I don't agree. I like to look at them, and every once in a while, they might have something so shocking that the market might react to that. But on a typical basis, because they come out every week, we look at the overall trend of what those reports say. And then the different geopolitical events, Russia, Ukraine, the lockdowns in China that might feed over into the supply chain issues that are even could make our current supply chain issues even worse. The different yield curves, some are inverted, some are not, and then the ongoing saga with oil. So what are our scenarios? And I've switched this around a little bit. For us to keep going down from here, what was causing this is scenario A, rising interest rates and kind of to a degree the yield curve concerns. But these yield curve concerns, that's farther out into the future, because when curves do go inverted, and if we do get into a recession, there's a real lag time between the two. What was freaking out the market, at least going into Wednesday's session, were rising interest rates. Are they going to keep going up? Is that going to keep pressuring stock prices? And then also, which feeds into this, for the market to go down, the internals in our broader markets are showing weakness. We're seeing a lot of weakness right now, kind of mixed weakness in the S&P, but other indexes are also showing some weakness. The Dow, the NASDAQ 100, the small caps, the mid caps. We're seeing kind of across the board weakness. Okay, what scenario can we look at to see if the market could go up on Thursday? We still have that strength that we were building after the intermediate term low. Are we going to get back into that kind of realm again? Well, we can look at our oscillators, but some are positive, but others are turning negative, or they're at least weakening. So that's kind of hurting this scenario a little bit. The moving averages are providing some support, but if we start to go higher, we might start hitting resistance. And then we saw Tuesday and Wednesday were pretty fast drops. And sometimes when we drop really quick, we might see some kind of a bounce. Now, we might see a follow through to more selling. But to fall as much as we've fallen in a couple of days, you might see some buyers coming in at some point. And if we do keep falling, will there be a support level that we end up finding? It may not be in the S&P. It might be in one of the other indexes. Now, another scenario, which is becoming also a little more likely right now, is that we go sideways. We're more in a neutral pattern. We've been seeing intermediate term swings that are pretty wild, and that has prevented the ADX from stopping its trending indication. But the ADX is weakening, and it may drop below 20. And so that could send us more sideways, where we see a slowdown in price movement, eventually getting to more of a trendless environment or choppy environment. So that could be happening. So if we don't see a bounce on Thursday, we might be looking more towards the first scenario to actually play out with a little more conviction. So what's our conclusion? The S&P is positive, but it's showing signs of weakness, and a lot of the indicators are turning negative. In the short term, we're mixed to weakening right here. We're not in a full-blown downtrend right now, but we're showing a lot of weakness. We're also seeing some weakness in the intermediate term. It is still kind of positive, but a lot of our oscillators that we look at, a couple of them have crossed, some of them are really rolling over. So we're seeing a real weakening here again with our oscillators. And then the moving averages, will they provide some support if we fall? If we see a little bit of a bounce, are we going to see some resistance? And then long term, we're back to mixed right now because the moving average is still going up, but we're below the 200-day simple moving average. So that's more negative. So, and then here's just a list of the different videos. This one that I'm doing right now is the daily snapshot video where I just briefly go over what's happening. But please, if you want to see more in-depth discussion about what I go through, please look at the full length daily video update. Okay, so thank you. Have a very good day. If you're a baseball fan, enjoy the start of baseball season and its opening day. And we'll just see how that goes. And I'll prepare the next video after Thursday's session.